A very good evening to all of you. I, CA Bhanu Dheer, a practicing chartered accountant, welcome you all on a very pertinent and contemporary session of today. That is, analysis of derivatives through trading terminals, conducted by Committee on Financial Markets and Investor Protection, ICAI, a committee dedicated towards nation building. It provides suggestions on various bills, notifications, circulars, and other documents related to financial markets to the government and regulators. Besides this, it regularly interacts with MCA, RBI, SEBI, Insurance Regulatory and Development Authority, Forward Markets Commission, and Stock Exchange on the issues relating to financial markets, role of CAs, and investors' protection. To create awareness amongst the public at large and ensure investors' protection, the committee conducts investor awareness programs through various resource persons and programs organizing units of ICAI. It also conducts certificate courses on forex, derivatives, fundamental and technical analysis of stocks and financial markets, and security laws. The committee is currently functioning under the chairmanship of CA Charanjot Singh Nandaji, a renowned personality who does not require any type of introduction, and Vice Chairman CA Kotha S. Srinivasji. Now, I extend, okay, sorry. So, the committee is headed by under the chairmanship of CA Charanjot Singh Nandaji, a renowned personality who does not require any type of introduction. A very kind and humble person, that's what I personally felt on the very first meeting with him. He is a person full of passion and enthusiasm, continuously devoting his precious time for the betterment of its profession, its members, and society as a whole. Presently, he is the Central Council member of ICAI and the chairman of Digital Accounting and Assurance Board, Committee on Financial Markets and Investors Protection, Committee on Information Technology of South Asian Federation of Accountants, and a vice chairman of Board of Internal Audit and Management Accounting, ICAI. He has also been the chairman and vice chairman of various committees of ICAI, along with the member of Quality Review Board, SEBI, and so on. The list is just never ending. I hereby extend my warm welcome to this prestigious personality, CA Charanjot Singh Nandaji, and would request him to share few key words with us. Over to you, Nanda sir.
Thanks a lot, Bhanuji. CA Nakul Arora, the Revenue Secretary of the day, Mr. Giver, Mr. Om Prakash, Mr. Animesh, Ashok, and all people who have come here to go home and like to. I'm sorry, I'll have to cut short my address because I'm sitting in the Vistara flight. I'm traveling from Hyderabad to Delhi, but I could not stop myself from interacting with you all. Let me tell you one thing very candidly. If you do your research, nothing in the world can stop you from adding value to your economic interests. If you want to become a multi-millionaire by legitimate means, it is only through stock markets. I'm not prompting you, I'm not encouraging you to invest in markets, but I'm telling you to use your intellect as a chartered accountant. You're aware that the institute has now allowed chartered accountants to undertake derivatives, future options in case of currencies and stocks. So today's session will put you at a parlous where you start understanding how derivatives can be used as a hedging strategy and how you could create value and worth by it. So ladies and gentlemen, I can see people looking at me. So I would like to withdraw now. The entire flight is full. So we'll be meeting next Saturday. Till then, goodbye from me. And I know that Nakulji will have a very beautiful session, ably assisted and moderated by Madam Bhanu Dheer. So goodbye till next Saturday. Bye-bye. Thank you.
Thank you so much, sir. Thank you so much. Now, I extend my warm welcome to Mr. Nakul Arora, our eminent speaker for today. He is a chartered accountant and a public speaker with over 14 years of experience in different roles and having done his graduation from Delhi University. He has expertise in the field of MSME, taxation and operations, compliances, bookkeeping, personal tax planning, and professional ethics. He has conducted various corporate workshops for several organizations like IMS, Burger King, Gandhi Smriti, Government of India, MSME and Startup, ICAI, Government of UP for food processing units under Atmanirbhar Bharat, to name a few. So I request Nakul Arora sir to initiate this webinar.
Thank you so much, honored moderator CA Bhanu Dhirji. I extend my warmest regards to CA Charanjot Singh Nandaji, the chairman of the Committee on Capital Markets, the entire board, ICAI, Mr. Gavarji, Nimeshji, Om Prakashji, and Ashokji. I also extend my greetings to, in absence of course, to the vice chairman, CA Kotha Srinivasji. And I am extremely delighted to have all of you present amongst us to discuss this extremely important topic, which is how to analyze derivatives through trading terminals. Now, before we begin the formal session, we need to understand that why is it important to learn how to analyze through trading terminals? Actually, the most important thing to learn is to analyze derivatives. Because through trading terminals, actually analysis is very simplified. A session which should have taken 3 to 4 lectures of 3 hours will only take 3 hours today. Why? Because all the analysis, earlier we had to teach that where will you get the reports from? How will you create the chart? Now nothing has to be created from us. Everything is available at one-stop solution. So before we start using the one-stop solution, it is important we respect the fact that we understand the intent of derivatives, why these derivatives came into existence, and what does every figure standing on the top of your trading terminal means. We all say that every investor, be it me, be it our moderator, be it the chairman, anybody who's investing in the market, one thing is common between us, that we have a driving figure or the driving analytic. Maybe somebody likes to invest based on the LTP, last traded price. So provided the derivative is useless, provided the share is showing every other negative, but if the last traded price is good, let's say I have the driving factor, so I will buy that share no matter what. I will be bullish about it because I have a driving factor or I have a driving analytic. And actually the most authentic analytics is the one which the most richest investor considers his driving figure or the driving ratio or the number. Now, to understand derivatives analysis, we need to first understand that how do and why do derivatives come in existence. So to explain derivatives, we have a very famous phenomena internationally, which is called the shiny bicycle phenomena. So what is the shiny bicycle phenomena? Do you have to say something about the shiny bicycle or something shiny has to be discussed? No, actually, shiny bicycle phenomena means that we have to make an assumption. To understand the derivatives, we will assume that let's say there are two friends. You are one of the friends and we have another of your friends. I'll just need a blank sheet of paper. Just give me 1 minute so we can, just 1 minute, okay? Okay, first I have added this blank sheet of paper and now I'm just putting it on the presentation view. Just a minute. I'm sharing the screen. I would request my moderator to confirm that if the screen is visible.
Yes, sir, it's visible.
Perfect, perfect. So what I'm doing is I'm just going to try and show my artistic skills to the entire audience because I'm a great artist, and if I'm not a great artist, you have to deem that I'm a great artist. So let's say this is a bicycle. This is a beautiful bicycle that I'm making. And it is very, very shiny, very beautiful bicycle is here. So this is a beautiful bicycle. Now let's say one person is, let's say the moderator, CA Bhanu Dhir has this bicycle. And my name is CA Nakul Arora. Let's say I'm Nakul. Bhanu's bike is required by Nakul. But what happened is she is shifting to another city. So she says, I want to sell it today itself for rupees 500. Now I love the bicycle, but I do not have the money with me. So I say, give me 3 months, because I'm not a chartered accountant, I'm an article assistant at that time. Now from the stipend of 1500 in our time, the only money that we can do is we can save 500 rupees in 3 months. So I say, okay, don't worry, be happy. I will give you 600 rupees of this bicycle 3 months from now, be it whatever the situation in the market is. She agrees, of course. She is going to get 600 instead of 500, plus no tension of management. It is safe, and the other person will take care of it, because that is Mr. N's prized possession. Now what happened is, in the market, earlier the market price of this bicycle was 1500 rupees, let's assume. But something happened, regulation, government regulation, something happened that this cycle went up to be of rupees 2000. Now, my moderator can sell this bicycle easy for 750 rupees. But will she be able to sell it for 750? No, because she has signed a contract with me that she will sell me this bicycle for only rupees 600. Until here, the game seems very easy, but now the complications start to arise. Because I am an article who does not have money. I realize without having to pay 500 rupees or 600 rupees, I can easily give this right of this contract, right to buy this bicycle, because 750 is the market price right now. So I will go to any other person. Let's say I go to Mr. Gaverji. I say, you need a bicycle, I have the rights for you. You want to pay 750, you pay 750. He'll pay 750 to me, and he'll pay 150 rupees to me, and I'll give him the rights to buy this bike at rupees 600. So you see, I sold this to him and I received 150 rupees. Whatever the earning was, whatever the difference happened because of derivative. So basically, I don't want to go into how Greek word derives the word derivative, then it comes from the Egyptian word, because people don't care about the derivation of the word. But now you can understand that this paper, this contract between Miss B and Mr. N, derives its value from the underlying asset, which is the bicycle. And whatever the change is happening to its value is affecting the price of this sheet of paper. This is actually the concept of derivative. There is nothing too complicated until you see the shiny bike phenomenon. But when you talk about derivatives, you'll realize that these derivatives are also bought, also sold. Now, the reason of buying and selling of derivative is that on today's day, let's say I have two people. One is Mr. G, we already assumed, who is bullish about it, that he knows this bicycle will go up and it will be more expensive tomorrow. Suddenly, I have Mr. Animesh Ji in front of me. He says that I think this bike is going to go low. This is going to go below this 600 as well. It will not even sell for 400 rupees. Forget about 600. So he's bearish about this. So what he'll do is he will sell this bike or this contract in advance. That is called putting a put option or a call option. We'll understand this in detail. The moment I started put options, things would have got complicated inside your head. Now I can read your brains. Then when I was just saying a simple contract of a bicycle, it is simple. But when I say it, there are multiple contracts. Billions and millions of amounts is involved in this. It is not the easiest thing to understand, but for people in this seminar, I'm sure most of them are chartered accountants, and for chartered accountants, nothing is difficult. We are the ones who remember 2000 pages worth of income tax to pass our examination. So I trust you all will understand the rest. Okay. My first primary concept of taking any seminar is based on two issues. First is that you should have the undivided attention on the seminar. If you are taking it, then take it with wholeheartedly. Otherwise, I would say forget about it. It's not important. But if you have already joined, you're spending even a single penny of electricity, then please listen to it. And the second point is, why should you learn? Is my job to tell you that why should you learn. So I begin with whys. Because most of the people in this world know what is to be done. Because the rest are misguided. At least what people who know the what are invested in the seminar. Then some people know how to earn from derivatives or how everything can be done. And only 1% of the world knows that why is something being done. And the one who knows why does not need any other support. So I'll tell you why should you learn this. Okay, Apple company is known, a very well-known company around the world. And I think you all will agree with me that we would consider its market capitalization to be a very important, very high value of money. So, sir, the Apple computer entire market capitalization is $3 billion, which is huge. Of course, everybody would want to, touch that kind of a value. And if you have $3 billion, you can buy the entire Apple company. That is not enough. So the entire gold in this world is worth $9,963 billion. And the GDP of the world, what money is made in the entire world in 1 year is just 80,934. Why did I use the word just? There's a deep reason behind it. Sir, the notional value of all the financial derivatives in this world is 600,000 billion approximately. That means $600 trillion market is what we are talking about. You cannot underestimate the potential of this market, because I'll tell you, I'm saying the positive side, not only the positive side. You should know its negative side as well, so that you get into the market, make profit, still don't get affected by its negative issues. People are investing because of the wrong reasons today. They're investing because of tips. What is a tip? Even me being an investor, investing from the last 12, 13 years, I don't consider, even I'm not sure about what value will be returned to my investments. Otherwise, why would I be doing anything else? I would just be investing. So market is risky, but we have to take calculative risks. How to take calculative risks? If we take an informed decision. There is no right or wrong decision in the market, but there is always highly informed and non-informed decisions. So please ensure your decisions are as informed as possible. And I will ensure you know about the markets enough so that you can take very well-informed decisions in the upcoming derivative trading that you will do. So I'll tell you, now we'll talk about trading terminals. So we need to know how do we get to trading terminals? We first need to know that when we were kids in 1990s, I'm sure many of people sitting in this meeting would have seen the time of 90s. And if not 1990s, we have seen web series about stock market, the Dalal Street days. In those days, you used to have the stock trading used to be a physical activity. Like you had to go to the stock exchange, or there was a broker who used to collect our script, get all the KYC documents, and then he used to execute our orders. But today that is not the case. And when we start to explain the history, they ask, why do we explain? Look, to explain derivatives, I needed the shiny bike phenomena. Similarly, to explain you what happens on trading terminals, you need to go back to the roots and understand what is happening behind the computer screen that you're looking at. Sir, it is never true that in stock market, you go inside and there's a shop. People assume it like this. The people who started trading from the computer screen, and that is why they're making mistakes and getting addicted. They think it is like a supermarket. You go there, you have many shares. And when they're selling, they think like we are going to sell in a scrap market or a, let's say, gold jewelry market, and we are selling our jewelry. Too many buyers when we have to sell, too many sellers when we have to buy. No. The only way to understand market or the stock market is to close your eyes and think about the Dalal Street. It is never that there is one to many or many to one. It is always and always one thing, many to many. And this phenomena is the toughest to understand, I'll tell you. Imagine there are 100 people standing in line. Let's say there is one product. This is a pen that I'm going to talk about. 100 people are standing there saying that these people who have the pen, we will buy this pen for 2 rupees. And the 100 people who have the pen, they are saying we will sell it for 5 rupees. Now imagine all of them have different values. Some is asking for 5 rupees, some is asking for 4 rupees, some is asking for 6 rupees, some is saying 2 rupees, someone is saying 3 rupees, someone is saying 1 rupee, 1.5 rupee. If you think this is complicated, then imagine it's not just one pen, it is hundreds of securities that we are talking about. And till the day you are going into the market without this thought, you will be making mistakes. You are actually doomed to make mistakes until then. Because using screen, and like I am right now sitting in a conference, right? But if I have not taken a physical conference, I do not understand that there are hundreds of people listening right now. Because if you ask me on my screen, I only see one person. But I am slowing down. I'm trying to explain it as much as possible because I understand what is happening behind the screen. Similarly, when you go to the stock terminal, let's say you open your stock portal, do not imagine that, okay, 5 people are selling this for this much. This person is selling the lowest. I should buy from him. No, you need to have your own targets. Sir, the people who are patient in the market are the only ones who make money. Any impatient person can never make money in the stock market. I know there will be many people from different parts of the country, but I want to use a jargon here. We say this to the client, and the word is, "Terko zyada ghai hai, to market maar ke khareed le." And if I loosely translate this in English is, if you are too impatient, then purchase it on the market value. And this is a very frustrated consultant who says that. And usually this is what happens in stock deals. So I don't want you to be impatient. I want you to be as patient as possible. So let's understand that you had to place the order to buy and sell, and this order was executed. Even today, people ask, why do we still have to place the order? Many people ask us that now everything is real time. Why do we still place the order? Sir, you are out of 100 people asking for a thing, 100 people are selling. They have their own prices, you have your own price. Just think about going to a property dealer's office. You say, I want to buy a house. Everything is online. Why doesn't he go and just give you a house? Okay, you like these things? Here is a house, go purchase it. He has to take time. Similarly, in stocks, sir, you need a lot of details to be followed. Stock sizes change everything. We'll understand impact, cost, and everything in the next few minutes. So moving on. Now let us understand what are these trading terminals. We need to really understand this in detail, that what these trading terminals actually mean. Sir, trading terminal is an intermediary, first of all. It is an intermediary. So intermediary does not mean here that it is not sitting in between of you. I've written the word intermediary software, but it is actually acting like an intermediary. It is a kind of a software provided to you. How many ways of software can be provided? It's a one-way conversation. So I'm assuming that you are giving me answers like, it can be a software patch, a small mobile application, a laptop application, or a website. Any of these is okay, but it's a software at the end of the day. It is given to the trader. And who is the one who's giving it? It is the stock broker. Now, please understand, when you have opened your trading terminals, please do not tell us that we are sitting on the market. You are just accessing the portal of your stockbroker. You're not accessing CDSL or NSDL. You're accessing the screen which your broker is providing you. Anybody can be there. I am not promoting any channel here. That is why I'm saying broker, trader. I can take few names, and please do not assume that I'm promoting any of them. You don't use any of them, I don't worry. If you use all of them, I'm not concerned. Some popular names to understand what I'm talking about is Zerodha, Grow. They are all trading terminals. None of them is a stock exchange. They are all stock brokers. Moving on, look, the word is with this trading tool. He here is the investor, can directly place orders without being required to call the broker or visit his office. You know, if you see old movies, 90s or 80s, especially American movies, India was not that investment savvy at that time. That time, the most common practice is you see a stockbroker always has his phone on. He's always saying buy, sell, call, put. What is he doing? Actually, you imagine you use the software today and say, okay, buy this, sell this. In those days, you did not have a computer to do this, then that. So you're actually calling the broker and saying that You're opening a channel. There used to be stock market channels at that time. People used to be watching TV all the time. Suddenly something hits them. Some of the analytics match and they say buy or sell, whatever. So you are the luckiest generation of this world if it comes to stock market. Our forefathers who made money in this, forefathers, I mean, the people just beside, previous to our generations. They have conducted these research using this pen and paper. They used to make all these details, which I'm going to show you today live. And these charts are very important. So don't consider that these are just charts. Let's invest on tips. Tips are the most useless thing. People on Instagram these days are investing. And the word they're using is this person helps you double your money. So I was very surprised. I said, double my money. I have had a portfolio for 4 years, which is the best paying portfolio. And my return on that portfolio audience is just 83%. And I used to consider I have a good return, 20-25% a month, 20-25% a year. I thought I am really earning well. I was becoming Warren Buffett in my head, and suddenly somebody says I'll double the money in 15 minutes. I said, this is so sad, but no, actually, realistically, returns cannot be produced that heavily. I'm talking about the portfolio which is slowly maturing, aging like a fine wine. It is put there, it's been staying there. I don't trade on a daily basis. I put some money 5 years ago, some money was put 2 years ago. Slow returns, whosoever goes for slow returns always makes money. But if you want to go for fast returns and you want to work in this options and futures market, derivative market, I am commending you that please do not ever do it without analyzing yourself. Nobody else will do this analysis for you. You are yourself responsible for whatever happens there. If you do not understand the chart, do not go into the stock market yourself. First, I'll also show you a dummy portal today. Don't worry, be happy. I'll take you to the online portals, and I hope the market committee will understand. I'm not promoting any portal. I'm just trying to tell them that these portals can be accessed to practice. Because some people go straight into the market, have losses in 6 months and get out of the market. Sir, I'll show you a portal where you can create a profile and at least practice, see how much return are you able to generate first. And then go for the practical trading. In CA as well, we give mock tests before we give final examination. And people who give mock tests, they're already aware what wrong can go. Some people, most of us wouldn't have given mock tests. But this is not a chartered accountancy examination which will come again after 6 months. It will, if you incur losses, your money will be lost and nothing will pay this back. Nothing will change going forward. Please be extra conscious here. Just because I was talking about the trading platforms, here I tell you some trading platforms which are available already. Just a minute, just a second. I need. Sorry, I just wanted to attend something in the office. Sorry, really apologize for that. So this is one of the platforms. This is 5 Paisa Trade Station. Then ICICI Trader Web. I'm sorry, I cannot interact with you. Otherwise, I would have asked about all these platforms. Very commonly heard platform these days. I can only talk to the moderator. I think Zerodha is coming out to be very commonly traded when you're filing returns and everything. Am I right, ma'am?
Yes, sir.
Most of our clients are giving us, especially salaried people. I don't know how this marketing works, but they're giving us Zerodha statements when AIS is pulling out some dividends and everything. Right. So I will show you the Zerodha portal and all the analysis will be shown on that portal, and no promotions to the portal. You use any of these or anyone outside this website. I have already said, in the market, be it the share market, be it the commodity market or derivative market, the analysis have to be yours. Now, firstly, people ask us, what is the purpose of this entire derivative contracting? Like, it could not always be a shiny bike which our moderator has and I want. No, it is actually very useful. We just saw that Nandaji was sitting in a flight in the beginning, right? We saw that, everyone? Okay. That aeroplane has a certain expense when it flies. And the most important expense is ATF, aviation turbine fuel. aviation turbine fuel has a certain capacity that it will be charged at the rate when it will be purchased. So when he had planned this trip, Mr. Nanda would have planned this trip maybe 2 months ago. I'm just assuming, maybe he has not, but we all plan our trips 2 months ago, 3 months ago. The price of the ticket is fixed 2 months before the flight actually flies off. Mostly 3 months, I think advance opening is there. We assume 2 months hedging is done. The aviation company, let's say, assumed something and raised the price to 6,000 rupees per ticket. I'm not saying it is 6,000, it could be something different. How many seats are there in an airplane? Approximately, I think there are 32 seat lines and 6 people sit per seat. So 192 people come out to be. Maybe 30 or 200 plus is there. Just a minute. Yes, it is 35 rows are there in a standard Boeing 757. There are 35 rows and 210 people are sitting. So let's say there was 6,000 rupees fare, then the journey is entire collection would be 12,60,000. So after deducting the aviation turbine fuel, the salaries of the cabin crew who provide you with your meals, your luxury lifestyle, and also of the captain and all the administrative cost which is there. He was traveling in Vistara. Vistara has a huge office in Gurgaon, right next to the Pepsi building. The rent there will shock your hats over your heads, right? So how is the cost going to be matching if we will never hedge our petrol prices, the aviation turbine fuel prices? So what does a airline company do? They book the fuel at a certain price. Let's say they will say, we would need the fuel at 600 per barrel. And this is fixed for them for the next 3 months, 4 months, 6 months, whatever the time is. So now they can fix the ticket price, be it there is profit, be it there is loss. Whatever may happen, they will book the ticket price according to it. And please don't say that they should also take a risk because it can go lower as well. Sir, they are doing a business of flying planes, not a business of hedging. This is the job of a derivative trader. They will do the trading. Somebody will earn profit, somebody will earn loss. And this is the only reason. I don't know how many of you will agree, but I'll ask my moderator that, do you remember, ma'am, that flight tickets have been more or less of the same rate in the last 5 or 10 years?
Yes, sir.
Everything is increasing, but the country with an aviation passenger of 32 lakh per day. In India, 32 lakh passengers take a flight in a day. We are the third largest.
There is not much variation, right?
Yeah, we are the third largest flying country in the world. And still, we do not have a lot of price advancements. Practically, Indigo is flying people for free. They are so economical. The only reason these airline companies are economical is first is because of sale and lease back, if we understand that. Second is because they hedge their expenses. Many expenses are hedged, not just fuel expenses. Now there is other things as well that can be hedged. Like when we have to talk about countries like United States of America, China, totally dependent upon labor work and a lot of factory work. They need a lot of fuel. They might need coal, other things. They'll fix the rates of it. There are countries which consume huge number of sugar, so they will hedge sugar for that purpose. Like if I start baking cakes today, I will hedge the flour and the sugar substance and everything, right? So hedging is done with the help of derivatives, and you have to now start increasing your imagination. Just give me 1 second. That I'll only need just 1 second. There's some. All right. Thank you very much. I don't know if there's any problem with the voice or the video, just tell me. I'll ask the moderator to tell me because I'm always getting a message of unstable network. So I'm asking the people if there is some problem. So if there is, then please tell, because we only 5 people I think I can see. So now I'll start complicating the issue. So first let's revise. We understand the cycle, the shiny bike phenomena is done. We are done with the phenomena that there are many people and many buyers and many sellers, and there are many stocks. We explained that hedging is done with the help of derivatives, right? What you heard with the help of the contract that was signed between B and N, that was actually a forward contract. Now let's understand. I'm not going to explain you term by term and definitions. I will take the entire story and I'll tell you what we are talking about. This contract was a single piece contract between Miss B and Mr. N. Now assume there is a shelf with hundreds of contracts like this. Contracts like this between different people, different things. And those contracts are put on a shelf for you and me to buy. Anybody can buy, anybody can sell. Somebody will be buying, somebody will be selling. So stop explaining it to people and stop understanding derivatives like it's a betting. Sir, upper betting, lower betting. Sir, betting is how easy layman explanation is given. Actually, these are derivative contracts, like a company has hedged with someone for a certain price. Now, many people are asked, like if aviation turbine fuel of Tata Vistara, he said he was in a Vistara flight. If Vistara has to hedge its fuel bills, there will be not even one single person will say, I'll take the responsibility. No. Vistara has left out so many standard contract. Sorry, there's a standard contract and 10 people, 100 people, 200 people can buy that contract. And that standard contract, when put into multiple copies, becomes a future. So this is the difference between forward and a future. Forward is basically OTC, over the table, over the counter. It is specific, it is very detailed, and it has certain restrictions and certain privileges. But when it comes to the futures, they are very standardized and they do not have a lot of options available. Now let us understand another concept. Because I've already told you about the forwards and futures. What we are here to learn is not forwards and futures, I'm sure. I know my audience, and most of us are talking about call option, put option, because that is what we have been hearing. Especially when we were listening about the reports that came in the beginning of the year. Okay, here it is. So I've taken another blank sheet. Let's understand. So our deal was between B and N. Many people would say that B is the only person who is being bound by this contract and doomed to lose. But I'll ask you the question, not just B, but N is also bound by the contract and losing if the prices go lower. I said it is sellable for 500 rupees. He takes the contract for 600. Imagine the company would not have increased but decreased the price of the bicycle. So the bicycle would have been only for 250 rupees. Now he would be bound. Now both of us are actually bound in this contract, and whosoever will be in profit will be selling. But I am going to give you a burn it all switch. So this is a burn it all switch. This switch can ensure that, like, let's say B has that switch. So either you will buy it for 500, so sorry, 600 was the price. Either buy for 600, or if the price will increase, B has an option to burn it all and none of this contract will be valid. This is called an option on the option of B. B has the option. Whosoever has the burn it switch is the one with the option. Similarly, I told you even N can have the switch. Right? Everybody can have the switch. No, if there is a switch, then both of them will have the switch. No, both of them, if they have a switch, then it is not a contract. This is again the same thing, binding contract. Only the sale will be executed if 600 rupees is the price. Okay. So I think you will agree that this switch is very important. This switch is very valuable. This is called the option switch. So if there is a loss, I will save myself. And if there is profit, then I will make profit. Sir, nothing is there, no free lunches in this world. Let me tell you, there is nothing free in this world. So if you believe that this switch will come for free, no. There will be a price of this switch. And that price is called the options premium. Now somebody might ask me, like in this case, I will assume the 10 rupees will be the premium of the option. Whosoever pays has the option. Only one person can have the option. I think I've explained very clearly. Now, many people will ask me that, how will you calculate the price of the option premium? Sir, this is a very long concept. You need to be an expert on the market. Then you need to be an expert on the, what do you call it? Strategic management. If chartered accountants are listening to me, remember the final exam of strategic financial management. And that was nothing. We did not learn to calculate the premium of, the options premium. It is such a huge calculation. So many formulas are involved, and still at the end, you use as many formulas as you want. The value of the premium is how much market decides. Like how many times you would have heard that market will decide. Actually, market decides with the help of formulas, and ultimately the decision is made, not ultimately, but penultimately the decision is made by the demand and supply. What is demand and supply so relevant? Please don't ask me that, because economics have been read in standard 11th and 12th, and many people say they don't understand market. It's such a basic demand and supply. What is there to understand? But you have to expressly say that you are unaware, incompetent to understand it. The only thing that can not make you understand is the incompetence if I have it. If I don't trade it, it's okay. I'm not saying trading is mandatory, but saying that you don't understand it because it is not useful, that is wrong, sir. It is useful, it is valuable. The only thing that can be wrong if I say I don't understand is two reasons. I don't want to understand it, fine, sir, don't understand it. I say that I don't understand it because it's not correct, there is something wrong with it, sir. No, nothing is wrong with it. The only thing wrong with it is that it is based on demand supply, and the highest level of economics is extremely simple. The highest level of knowledge is the most simple knowledge. That if I have, let's say, this spoon, and I want to sell this spoon, if only and only Miss B wants to buy this spoon, the price of this spoon will be mutually agreed, and I can send this for, let's say, 10 rupees. But suddenly Animeshji says that I also need the spoon. Would not I have the option to say maybe Animeshji will, and both of them are there, so they'll have to pay an extra price for it. Right? Somebody will pay the extra price, and as many number of people keep increasing, the spoon will get more expensive. Similarly, reversal. Let's say I have 10 people holding a spoon, and there's just Miss B buying the spoon. So we'll all have to reduce a little. So the demand is the same price, and supply gets increased, the price is reduced. The most important concepts in the entire economics, and maybe in science as well. I'm not a science student, so I don't comment on science, but I even feel that even in science, the most important concepts are simple. That when people say that nothing is permanent except change, that is a very simple concept. Even if you keep something on a place, it will not stay like that. Something will change about it. Like even if you have logged into your mobile in this seminar and you're not listening to me carefully, your mobile battery will still be drained. Change is constant. What direction will it happen? It's in our hands. Okay. Let's understand some features of trade terminals. Sir, we will be getting into important concepts now. And please, if you have heard until here, this is the worst time to stop listening, because if you stop listening after this, then the most important analytical part will be missed. Up until now, we are trying to explain. And somebody who starts listening after this, I think the committee will have a recording. I think this was an easy way to understand things. So everybody, I think, should refer to the easy explanations. If you don't understand what is a derivative and how is it traded, then these are all moot points. So first feature is real-time market updates and quotes. Actually, this is more easily explainable in the daytime. If I show you the portal in the day, you will see it changing every minute, every second. But if at this time of the day, I cannot show you. I'll show you the portal, but it won't be changing because the market is closed already. But any which ways, but you can at least see that real time. Why is it important? I told you in the early 90s, you saw news. Let's say 10 people decided to buy the share. I told you demand supply works in the market. So you would at least take some 5 minutes to check, 10 minutes to analyze, 1 minute to place the order, and at least 5 to 6 hours will be required to execute that order from somewhere. But in today's scenario, it is simple. It is like I do, and you're married. So the moment there are 3 I do's, a person is married. How? You go to the portal, you put a buy order. A price match, there comes a price match on the quantity, and some quantity is there, you get that quantity. I do. The moment your entire quantity is completed, your order is fulfilled. I do, and the share is yours or somebody else's. It is as simple as that. Moving on, order execution tools. This is the most important tool. I'll tell you why. Because we have been trading from the time our father was trading when we were so young. And obviously, I don't come from a family of very educated people. So we used to be trading only with the help of the neighbors and somebody who was educated near our house. So that uncle used to come to our house and he used to say, buy this share, it's going to go huge. Buy this share, going to go huge. And 4 or 5 days he used to convince my father. And let's say one of the shares was, this is just a hypothetical name, was Reliance Petro. Reliance Petro was very popular in 1990s. So he took 10 to 15 days to convince my father to buy Reliance Petro. And then he executed the order. And then he took the order. And after 1 week of execution, he said, oh, all the shares were done. We did not have any to buy on this rate. Now the rate is this much. Why was the problem there? The moment my father would have been convinced, if there was an order execution tool, that very moment the order would have been executed. But that time the orders were not executed like this. So that is why order execution tools are most important. And third one is analytical tools, which we are going to mainly talk about today. And we have been talking about analysis. Visual representation of data is a part of understanding the analytical tools. The fifth one is the core, data confidentiality. Be it a market expert or a professional of any kind, the people who do the business of this, people who are investing their brain, they want their data to be confidential. God knows some people are now ignoring social media because they don't think it's confidential. Why? Because they've just posted a picture of their child and suddenly they have started seeing ads of baby products. So we know our privacy is at breach. And not just our friends and family are seeing our pictures, but companies are, we're not scared of the companies, we are scared of the malified intentions and people with malified intentions. So, ladies and gentlemen, data confidentiality is a very important feature which is inbuilt, and every trade terminal has this feature very well listed and very boldly expressed as well. So please be extra conscious, extra reliant, and extra respectful of this data confidentiality feature. And always read the confidentiality guidelines of any portal. Moving on, advanced ordering tools. I told you, order execution is advanced. That is a separate story. Ordering tools are so advanced. I'll show you just in a minute, maybe if the ordering tool is active at this time. The ordering tool these days has a 3 options. One, tell me what price you want to buy. Price, quantity, what kind of order you want. Okay, if you don't, what is your target? Do you want to make 50 rupees from the share? Put a target price. That means you'll buy and sell at your order. Then the third thing, it tells you to stop loss. That at this point, you can stop my loss. So I have a target, 50 rupees to earn, but I don't want to lose more than 15 rupees. This is the level of ordering now, which is being done. What quantity do you want to buy at this price? What quantity do you want to buy at the other price? We're on another level of trading. Please do not start using these tools before you have understood the basics of trading. Moving on. Filtered news feeds. The biggest issue of today's generation, and today's generation, I include myself. I'm not as old as I might seem to be. It's just hormonal issues. Well, the biggest issue is WhatsApp University. Many fake news and rumors are very common. And it is okay to vote because of a fake rumor, but it is very difficult to invest because of a fake rumor. I'll tell you how. So if you vote wrong, at least bureaucracy is there to protect you. At least judiciary is there. There are 4 pillars of a democracy. More than these fake news, the most dangerous fake news is which makes you take money out of your pocket. Be it on a product, be it on a asset, or be it on a share. So because the money is gone out of your pocket. Let's say a long time ago, I don't remember exactly what share I was talking about. I'm forgetting the share, but something happened in Connaught Place about it. Black Horse was a very popular company, and it was told that Black Horse is investing in this company. And that was a fake news spread by the whole company itself. And at the moment this news came out, many people bought the shares. So I told you demand, supply, demand went up and the prices went rocketing. And in the third day, Black Horse gave the statement that we are not investing and there is not even a conversation on investing. The prices went down like anything. Everybody wanted to sell. Why? Because these people at that time were working on a tip. And more than tip, what is dangerous is the fake news or rumor. Not even fake news, even correct news is sometimes dangerous. So I have a very good friend of mine, and I'm not promoting the share, sir. You can buy or not. That is your choice, but you cannot ignore the share. The most grown share in the past few years, recent past, is Adani shares. Total Energies, Adani Green, Adani Ports, everyone grew. Like the multifold growth has been seen. When the report of Hindenburg came, many people did not even read the report. If I ask people in this meeting, they would not be able to mention 20 points from the Adani report together without using Google. This is the position. Please accept. That is the position. But at least 10% of these people would have lost money if they're investors. All the investors, out of them, 10% people lost their money because they sold as soon as they heard the news that somebody has caught fraud in the company. Then what is the situation? The share is still there. Everything is going on. We did not do our own analysis. We accepted somebody's analysis and we sold the share. I'm not saying the report is wrong. I'm not saying the report is right. All I'm saying is we should do our own analysis and take the decision. If your analysis says the same thing of somebody's report, please do it. But now I tell you where comes the filtered news. We want to see the news about certain shares. Or we want to see the news which is authentic data. Filter the news. Only news about authentic reports like RBI, SEBI, maybe a report from the institute, maybe the report from the directorates, maybe the report from the CBDT. Such reports will be considered, and rest of news I don't want to see. Fake or honest, I don't want to see the news. At least your decisions will be informed. Sir, I told you there are 2 kinds of decisions. Informed, well-informed, and less informed. Uninformed is better than misinformed. I'm telling you. One wrong information can ruin your portfolio, it can ruin your life. Because panic selling, I told you, impatient people get impatient. Panic selling has been seen so many times now, and so much education has been done about panic selling, but it still happens. How many shares have been circuit broken in the last 1 year? That shows you that how much panic selling happened. Circuit is applied so much, so many rupees under the opening value, and people are ready to sell their shares. So like from the morning to even evening, people are ready to lose that much of money. It surprises me and totally scares people. But then there is advanced research tools. We will try to shed light on them, the advanced research tools as well. But advanced tools have to be practiced or have to be learned on a different scale. So while research options are there on each trading terminal, but the usage and fitment is very generic in nature. You understand that those tools are only generic. They're made for everybody, right? Everybody sitting in this meeting will have to use the portal. including all the audiences, all the people sitting, and everybody who is not even sitting in this meeting has to use it. So they don't give you specific data, but I told you everybody has a driving indicator in the market. So my driving indicator is something I might have chosen. It could be a numerological number that whichever share will show 7 number twice, I'll buy it. It is lucky for me. Anything could be a driving indicator, but sometimes even technical things are not available out there. But most of the things are available on the portal. I've checked the portal recently and they are amazingly updated. If you want to look up for the financial matrix, historical earnings, profit, loss magnitude, any specific company, get expert advice also on that company, then advanced research tool can benefit. So, because on the portal, you would not find trading terminals would not have their historical earnings. They don't have financial statements there. Recently I was having this series on my LinkedIn that how financial frauds can affect the market price of a share. How you should see a financial statement. People should closely observe the notes of the accounts, not even of the long-term shares, but even if you want to trade derivatives of it. Please be very aware of how the assumptions are being taken in this company. Because I'll tell you, there is a paradox, there is a phenomena which is called a never-ending month. Never-ending month phenomena is when you book profits or sales of months or the orders which are not even properly executed. Like just a letter of intent has been received from a client and I booked the audit fees in this year. I'm saying as a chartered accountant, as companies do other things as well. Maybe there has been a small change in the circumstances. We book a huge profit based on assumptions. It is possible, especially people using Ind AS know that not just the future losses, but even future profits are also being booked. Because understand, my friends, the intent of accountancy has changed multifold from the time when we were studying to the time when we are practicing. I hope Bhanuji will also remember there used to be a concept of prudence, or there still is in accounting standards.
Yes.
But now prudence is no longer relevant in Ind AS. In Ind AS, the word is only true and fair, and it is true and fair. So a lot can be done, so you should be very aware. And if you want to be very active in certain shares, like let's say I want to trade derivatives of, let's say Tata Industries, so I should be very aware of what Tata Industries is doing, where is it dealing, what is the current, even the leadership, even the board of directors, you should know that. If you want to do it yourself, and derivative trading should be done yourself. Otherwise, why do you think the mutual funds make money? Standard returns are always given to people. Because mutual funds, you'll never see mutual funds actually, trading just because they're having a feeling. Just 2 or 3 key drivers are chosen and mutual funds have had a trade. Right? Mutual fund people are always aware. Sometimes they only invest in companies they have relations with the board with. So that much of awareness is seen with mutual funds. I'm not asking you to become a mutual fund, but if you want to invest, they're investing in 100 shares. You want to invest in 2, read about the 2. Learn about the 2. What is the profit and loss magnitude? Sir, I'm not criticizing. Like I was not promoting companies earlier, I'm not criticizing now. There were many IPOs, Paytm, Zomato, oversubscribed. People were going crazy for these shares. But so many of these companies have never even made a single penny of profit. Don't we understand this concept? It might be controversial, but I'm saying it in front of so many people. That don't we understand the concept that in a longer run, the culture of burning investments is a very dangerous culture. And the ultimate loser will be the smallest investor. Because large investors will make their money when the valuation will change. But small investor just invested 5%, 5.5%, 0.2%. How will they make their money back? Not possible. Actually, you are the reason they made their money back. Small investor is the reason large investor gets saved. Their target is ultimately getting to the retail investor and leaving it there. Otherwise, no business is made without profit. All these popular founders are, I'm not saying, let's not go into the controversial discussion. Let's be on the topic and let's understand analyzing, because this will get a little emotional discussion and sometimes controversial things come out of this. So let's move on. Okay, I was talking about important terms, but let me tell you, friends, even when I talk about important terms, I always write the first line to calm down. Patience is the key in the market. Because many people are in the market with half knowledge. So maybe even today's session is not enough. You have to read more, you have to study more, analyze more. And some people would have taken the session until now, and I must have been not asking you guys. Some people have taken this much knowledge that you have right now and are trading in derivatives, made 5 rupees a profit and think themselves as the Warren Buffett of the next generation. Because they are not calm, they don't have patience. 2 profitable scripts is nothing. No value of 2 or 3 times of profit, 100 times of profit. You can make profits even in gambling, but does that make you legitimately qualified gambler? Is there any concept like a qualified gambler? That is why I say this derivative market and share market is not gambling. This is not gambling. Please do not ever say it hurts physically. We people have been studying the market for 10, 15 years now, and people say that it is gambling. Where is the logic in gambling? Gambling is purely based on luck, right? And this is purely based on analytics. Luck has a small factor in the share market, and that is equivalent to the amount of luck that is there in your education, your business, and your job. The only problem with the market is you need a very high level of, like what happens is, to do a job, we study for 15 years in school, 3 years of nursery, kindergarten, and then preparatory or maybe UKG, LKG, then 12 years of standards, then 3 or 4 years of graduation, and then 2 years of masters. Maybe we have studied for approximately 20 years, and then we start of thinking of doing a job. And for share market, what do? Earlier, it used to be a 6-month course. That time, market was less complicated. Then the market got more complicated. The course reduced to 1 month. And these days, people are saying, just talk to me for 15 minutes and I'll teach you trading. That is what is making it gambling. It is not gambling. I'll prove it to you. There are so many things you can analyze. And if you have invested even a single penny, or even I invest a penny, and I still need to learn more. You need to keep reading for doing this job, sir. Sir, firstly, bid price. Ask price. What is a bid price? Bid price, I told you. Now, all the stories that I've said since the starting of the session will have to be captured and have to be practically thought of. Bid price. I told you there's a market, 100 people in this line, 100 people in this line. These are there to sell something and these are there to buy something. The buyers have started shouting. So this is the line of the buyers and this is the line of the sellers. Sellers and buyers. They are 100 people. And they are saying a price. All 100 have a different price. This price that they are quoting is the bid price. That what rate and how many people are, I am telling you, in the market when you go now, you can see exactly what person, what quantity and what price has he quoted. The price, quantity and the bid can be viewed properly in detail. Many people don't even see this and they're executing orders. I know it for a fact because they're making losses of 20,000 on just investing 2 lakh. I understand share market sometimes does not give you a profit of 20% or maybe 10%, but a net loss of 10% in the year is shocking. You can at least come out on no profit and no loss if you are if you have hedged properly. Yes, of course, to make profit, hedging has to be avoided and a pure risk has to be taken. But I don't think that you can make such a huge loss if you have analyzed everything. Now, let's say there is a price these people are shouting. The sellers are shouting a certain price that I will sell at rupees 9, 10, 5, 6, 7, whatever. This is called the ask price. Now, let's understand with a fun example. Do you know Tinder? Everybody must know Tinder in this August gathering. There's a thing called match. So you keep on liking profiles, somebody else keeps on liking profiles, doesn't matter. But when two people come on the same ground, that is called a match. Let's say somebody wants to buy at 5 rupees and there is somebody who wants to sell at 5 rupees. So whosoever out of the two has the smaller quantity will have their order executed. And believe you me, in live seminars, in the rooms, I have been asked the question, sir, why will the small number be executed? And please, I know people in this room are also having that question. One or two of you would have, and that is a sign of a lost mind. So please, whosoever had the question, why will the small number, please explain, then please have a glass of water, because now your brain has started to diverge from the session. Look, because there are two people, one is ready to buy 10 shares at rupees 5, and he is ready to sell 5 shares at rupees 10. So obviously, whatsoever he's selling, that will be executed. Then he's ready to buy 5 shares, he's ready to sell 10 shares. Obviously, he wants to sell 5, that will be executed. This can never be executed. So these are normal stuff. So please don't be confused. Anyway, that was just for some fun that I shared a small joke here to waken up people, because I cannot see your faces and I don't even see any chats. So this is a very difficult way to do the session. I hope the moderator will agree with me. It's a very silent room that we are sitting in.
Exactly, sir.
Yeah, we only have two people who are talking to each other a little bit in between. Okay. GTD and GTC. Look, sir, I told you there are 10 people. They're giving us a price. 100 people giving us 100 different prices. But earlier, what used to happen, you'll be surprised and you'll be very astonished that, let's say I put an order in place that I want to buy. Just a second, I've closed my pen. I want to buy 10 shares in a company at the rate of rupees 15. And when will I put this order? When the share is trading at around 20 rupees or maybe 16 rupees, right? But 15 but whenever it hits 15, the strike price is hit, you purchase the shares. So there were orders which were GTC, good to cancel. And there are still orders. I don't know, because in the morning when we were doing the some procedure, we saw GTC was still an option. But I don't think in the market that is available, and that is not an option we should take. Because in GTC, good to cancel, even after 20 days, the order will be lying in the market, in the air. And let's say this share suddenly start rocketingly going down, and your purchase is being executed just because you forgot to cancel your deal. So that is why the greatest thing is to cancel good till day. If that order is executed in the same day, nothing better than that. Otherwise, what will we do? We'll go into the market next day and place the same order. As simple as that. Why is it as simple as that? Because whatever price you've chosen, there is an expiry date of until when do you want that price? Because there comes the concept of impact cost. Sir, this is the most important concept in the entire derivatives part, because impact cost is the absolute measurement of liquidity of a particular commodity. And why is liquidity important? I'm so glad you asked. Liquidity is important to show that the transaction is genuine, that this stock is genuinely traded. Because if I have to wait for 5 days, 10 days to sell this share, then my liquidity is not there. No, if I need the money today, I see some other share which is doing better. I want to put my money, take my money out and put it in that share. Can I do it if the share is not even liquid? No, I cannot. So the impact cost is important because it is the absolute measure of liquidity and the best measure. Whatever share is the most transacted share on the market is the most trustable share. Because let's say it's a small share, only 5 or 6 people in the home are trading that share, or maybe 20, 30 people are trading that share in between each other. Is that share more trustable, or a share which is being traded 10 to 15 times or 50 or 100 times every day? You will have the answer yourself. The more it is being traded, the better the share. Because that means the share is genuinely wanted and genuinely available. There might be shares who have a lot of buyers, but nobody is there to sell. Right? That's not a useful share. There might be so many shares which are available in abundance, and there's nobody to buy. Like Yes Bank a few years ago, a year or two ago, there were so many people ready to sell. But was there a point in buying? Because if you want to buy this for 1 or 2 years, 3 years, those people have made so much of money these days. We know that. But if somebody wants to make profit intraday or maybe in a week or a month, such shares have a high impact cost and they are never recommended. These are only there for people who are consistent in the market and they can leave certain amount of money in the market for some unknown time. That is a bigger concept. Unknown amount of time this money has to be left there. All right. Then understand LTP and ATP. So many things are cross-connected. LTP is the last traded price. Now you'll ask me, why is last traded price written here so specifically? Sir, I told you, the bid and ask price you see is the price somebody is ready to sell on and buy on. It is very different from the price the last trade has happened on. I'll tell you the difference. Wherever you come from, I don't know, the audience I think is here from the entire country. But the only thing common in the entire country or even in any country of the world, that when you have to buy a property, the conversation starts like this. You go to a property dealer, you ask what is the rate of the property. What does that dealer tell you? Sir, people ask for this much. And people want to buy for this much. A few years ago, I was in one of the not a very high society, not a very low society, mediocre part of Delhi. And he asked me for 5 lakh rupees a yard. Like for a 100-yard plot, unconstructed plot, I would have to pay 5 CR. So I said, my first question, what will be my first question? Manuji, I would ask you the question. What is the first question after you get to know that what is the average demand of people here? I think she's unavailable, so I'll just tell you. The first question which people buying property ask is, last property, what was the deal of the last property? What was the recent deal in this society? Like they say, people ask for 2 CR in this place for every 100 yards, but nobody is ready to pay. You can ask any amount of money. Rumors can make you ask money. That some places airport is coming. And it's been coming from a long time. The kids have started going to airport now. The kids who were not born at the time the airport was coming have started going to college now and have started using the airport to go to different places. But the airport has still not come. So such people are still asking for a lot of money for their property. But is somebody giving that money? No. And if you see property buyers, they talk very rudely and they say, this is not even worth 5 pennies. I would buy it for this much. No value of how much somebody is asking and somebody is ready to pay against. It is valuable to analyze, but it is not valuable against the last traded price. Last traded price is important, but we are not talking about property market here. We're talking about the stock market. The biggest difference between the two, and mark my words, it is very important to understand that it is a volatile and a commonly traded item. Property is not commonly traded. So last trade and the trade previous to that might have a difference of 6 months or 8 months or 2 months, or maybe a month. Even property is preferred to be purchased in a place where the sales and purchases are very common. In North India, we say khadi properties. khadi properties or the standing properties which are not sold very commonly. Everybody will tell you that people are asking for too much here. That means they don't know exact price of that thing. If the right price is available and the right buyers are available, the property will be sold as well. Similarly, the shares. But shares are more frequently traded than property, or maybe I should say, I don't know if I'm right or wrong. When it comes to trading, shares are traded more commonly than any other thing except money. Currency notes are traded maybe more than money. Rest everything is traded after the number of shares or commodities or derivatives are being traded. So let's understand, because last traded price can be a little manipulated, not manipulated, but maybe somebody was in a very, very big rush. Some impatient person has purchased for a very high amount, or an impatient person has sold for a very low amount. In that case, the last traded price is not very relevant, but you go to the average traded price. You can take it for a day, month, year, that's your call. Totally your judgment. And that average traded price, my friend, when compared to the last traded price, will give you the correct picture. If it is too far away, let's say last traded price of the day and the last traded price of the week, or maybe the day, or maybe the last 3 days, 2 days, whatever you feel like. That, my friends, will give you the right picture of what price you should purchase on. I think property, don't forget the example of property that I gave you. You all would have purchased property, if not yourself, maybe with somebody else, with somebody else's help, you might have taken the decision. But just like you purchase property and you consider last price and average traded price, you have to purchase stocks and the derivatives as well. And trust me, the knowledge of all sale purchase that you've done in your life is relevant when it comes to stock market. Anyways, now let's go to the other points. These seemingly simple words are actually really very, very complicated. How? Sir, let's see the opening price of the day and the closing price of the day. Why is that important? Just 1 minute, there is some chaos, sir. Just a minute, just 2 minutes. I am extremely sorry. Actually, there's been heavy rains today, so there is some electrical issues and some other issues around in here. So I might have to go again 1 or 2 times. I've already taken a few breaks from you. I'm so sorry, but that's just the emergency which we're suffering of, some electrical wires and something. Okay, so these small innocent looking terms, opening and closing. Sir, open and close. Let's say a share has opened on X amount and closed on a Y amount. The larger the difference between the opening and closing, the larger is the volatility of the share. And a volatile share will appeal very largely to a trader, a risk-taking trader. If you have a high risk appetite, you'll do intraday into such share. I'm not saying if you should or you should do what. Totally your call. Market is not governed or even guided by a very intelligent person. Leave aside me. I'm just a very small part of the entire ecosystem. So if there is a large volatility, larger the volatility, the risk is large, and also the other rewards are large. Because let's say I take a downward call on this, I put this down. I would make money if it closes low, but I have to be very risk-taking on the volatility, and I should have a good grip on the technical points. Only then I should start playing with this particular share. Then high and low, the highest price of the day and the lowest price of the day. Unfortunately, here I have a second opinion. If there is a share which is opening and closing at almost the same amount, but their high and low is very volatile. My assumption in these shares is usually that these shares are cross controlled. Maybe some transactions happen because of certain news, but the others do not respond accordingly. It will be very difficult to find a share which has a very high volatility in the day, but closes and opens almost on the same amount. This is volatility issues. We'll understand more terms as well going forth. But I don't think there is any way that we can take questions. Is there a way where we can take questions from our audience? Because I think we have been taking it for a little time now, and people might have placed their questions. I'm trying the Q&A box as well, but I don't think the questions are coming here. It must be going somewhere on the portal. Okay, any which ways. So let's understand the other concepts available. Advantages of trading terminals. Sir, I told you that due to a certain execution issues or due to the operational reasons, in the past there was a lot of times that the share deals that were being made were not executed. Sometimes even because of the mistake made on the part of the broker or the staff of the broker. Broker was okay, but staff of the broker used to make a mistake, and in that case, we used to have a problem that the transaction was not executed. See the irony that how much dependency was there on people other than our own self to execute small share transactions. But today, that is not the scenario. Today, the scenario is very, very different. Today, the scenario is that you are in total control. Absolute control of the entire transaction is in your hands. Because you're using a trade terminal. And that trade terminal is going to help you to actually take the control. But still don't forget that the ultimate and the penultimate control of the market is in the hands of the market. So yes, but still, just a second. Just give me 1 second. Thank you for your patience. All right, moving on. Then you can always keep a close eye on your investments. In the past, you had to, even if we had a portal, even if we had those market instruments, we could just see the bid and ask price and some data of the market. But today, by just getting the right clicks, there are 15 places you can click and check the entire biodata of your shares. This is actually a very important update, especially the people who have been investing from long do understand that. But if you have so many tools and still consider that you're gambling in the market, I am surprised and I'm really sorry. I don't know what to say after that, right? It is cheaper as the brokerage charges also become less. The concept of the portal we have been talking about, by chance that name has come in. The name of that portal is Zerodha, Zero Rodha. That means no brokerage charges were being taken on a certain transaction. That is what the USP was. Now you can trade on the go as well, even if you're traveling out of the city and trade through your laptop or mobile phone. This is the most important part, sir. Why is it important? I told you, keep a close eye on your investments. Keep a total awareness of your investments. But earlier stock market, people who used to work in the stock market, people were said to miss their even the functions of their daughter and their son, because when the market was open, they were on the computers to have the knowledge on the positions of the right thing. I am asking you a situation why they used to always be at home at least. Let's say there's a big news that hits the market, and suddenly a share becomes the right entry point. I will also explain you how to identify the entry point and exit point. So stay tuned. This is just my way of keeping people stay tuned so that they will listen to the rest of the session. Now I have the important points here. I'll tell you how to enter and exit the market. There's always best times and bad times to enter the market. So in that case, they had to ensure that if certain news hits the market, they will get inside the market as soon as the news comes, because they had to be at home to execute the transaction, and the brokers had to remain at their office available all the time so they get the orders. But nowadays, that is no longer the case. Please remember that for people who had seen the time before computers, it is easy to understand that how important is this feature to trade on the go. We've seen the time when we used to travel thousands of kilometers and there was no way to communicate at home, not even the landline phone. Because that time people did not used to have phone at their home. PCOs were not that common that we'll use a PCO to tell our family. Our family was okay. Your son has gone out to travel with your family, without the family, with friends, and they'll only know that he has come back after 10 days. That he has come back. And what happened will be known at that time. Today, you know what our family member is doing through their WhatsApp status and their Facebook pictures. So that is why it is important to know trading on the go is a very big, is a very big development. And now please don't have excuses. If you want to trade, don't have excuses. You should always be ready to make and take calls whenever you are trading and you have your mobile phone. Most of the applications work on mobile phone. So no more excuses. Trading, if you're trading, then trade like a pro, or don't trade. Like they say, trade in style or don't trade at all. Which is. I will spend some time on the second point here, but before that, since there is zero broker intervention, the chances of error are high. In past, there used to be a broker. We used to call him broker uncle. And broker uncle was a very sweet man. So if we were buying a share, he used to tell us that you are buying this in the heat of your age. This won't work. And sometimes we agreed and sometimes we disagreed and put money into those shares, and we used to come out with burned hands. Because yes, we were a little hasty too as young people. But now there comes the problem that now, because we have a trade terminal, you don't have somebody to guide you on every step. But yes, then you have to be responsible for yourself. Now there comes the second point, which is a problem. Sir Warren Buffett, I'm not saying Sir Warren Buffett, I'm Sir this to you. Warren Buffett is a big investor, maybe the biggest if we don't disagree, and he's a legendary investor. He said that derivatives, please note these words, derivatives are weapons of mass destruction. Weapons of mass destruction. Nuclear bombs are weapons of mass destruction, and he's talking about derivatives. Why are these weapons of mass destruction? My dear audience, this derivative, if not used correctly, can actually lead to so catastrophic results. It can leave people bankrupt, and forget about bankruptcy, it can leave you in huge legal truffles. Not because of the market, but because you will be so addicted to this sport that you will do anything and everything to get more money and get back in the game. So I've seen people who get in with certain amount of money. Let's say they came in with 5 lakhs and they decided to enter the market at a suitable time, right? And after a certain amount of time, just a second. And after a certain amount of time, that 5 lakh turns into 6 lakhs, 6 turns into 8. The hunger increases and suddenly they start taking more risk and they end up with 4 lakhs. Now the car will not stop. Even if it goes to 0, this person will arrange for more money and more funds. Mind you, more funds will be arranged to get back into the game as soon as possible. I'll be very harsh now to some people. This happens mainly to people who have been investing without the analysis. Because people who will be analyzing and investing, there are two basic things. First of all, they will make very less mistakes. Results can be wrong, but they know their investments are correct. So they'll either lose with the entire market, like something goes wrong with the company, some CEO dies, CFO dies, or something very major contract is fallen off, some legal problem happens, some cross-border issues happen. Otherwise, their calculations are okay. Or the downfall which they will have will be totally their risk. Because this addiction comes with one thing. Like I know for a fact that I have invested a lot of time in the research for this session. Okay. I've invested a lot of time. I've been doing this from a long time. These information that I brought for you is totally well prepared in both the scenarios. Let's say I have I received some messages in the evening that the session was wonderful. It was out of the world. I'll be okay because I'll not be too excited because I've worked hard on it and it's okay that I get a message that it was wonderful. Similarly, if somebody messages me that you're useless, you don't know anything about derivatives, stop talking about derivatives, I'll still be okay. Why? Because I have worked on this and I have confidence in this. And the right knowledge and the awareness ensures that neither are you too excited when things go your way, neither are you too, neither are you too devastated when they go against you. So please do not get addicted. Don't make it an obsession. And if anybody, any friend, family member, little one, kids, anybody who's addicted to the sport, help them out. If you start reading about something, the addiction will go away any which ways. Right? So the addiction is only until there is less awareness. Addiction is nothing but lack of awareness. So the addiction can only go with education. So if you're educated, educate others. I've already kept shiny bike phenomena in the end, but I don't think that shiny bike phenomena is required anymore. I'm talking about futures contract, call option, put option. We've already discussed that. I'm so sorry. It looks like the slide has been made by Shinchan, but no, this is me. I just removed the ink marks. Okay, these are the most important terms that you will listen and learn today. After that, we'll just be left with the live portal interaction. That is also time consuming. But if you understand these terms, and I'm sorry, it's a one-way conversation. Bhanuji, do we have any way of Q&A in this session? I don't think so. Is there a Q&A which is coming to you?
No, sir. No questions as yet.
No questions are. Is there a Q&A option there?
Yes, sir. I
Okay.
have another screen also, but there are no questions as yet.
As yet, there are no questions. That's not a problem. So we can keep 5 or 10 minutes for the questions as well in between. Otherwise, we'll go to the live portal, right?
Okay.
So let's begin. Firstly, exponentially moving average. What is exponentially moving average? Well, this definition does not do justice to how important and how relevant is exponentially moving average. So exponentially moving averages, this is not how it is written, first of all. This is how it is written. Like a word, line 20 is written afterwards. So exponentially moving average 20 means that let's say there is a certain amount which is mentioned there. Okay, what you should do, I think, we should take this to the live portal and let's learn the terms on first-hand basis. Right? The terms will be better explained on the live portal. So I'll just share the screen of a live portal and log into the portal. This is a dummy portal, just created with an original name. So So please respect the privacy, and I'll just try to keep the data as hidden as possible. And this is not an actual investment portal. We've just made this in the morning or in the daytime, in the morning of one of the sessions. So just a second now. I'll just log into the portal. Just a moment. Right. Until I do that, you can all, of course, put your questions in the question box. Yeah. Just a moment. I'm just logging in. I've muted for some privacy reasons. Just one. All right. So now I'll be sharing the screen with you in a minute. I have been able to log in. So are you able to see my presentation right now, right? Bhanuji, my presentation would be visible right now, right?
Yes, sir.
So what I'm doing is I am changing from the presentation to the portal. Okay. Are we on the portal now?
Yes, sir.
Okay. Forget about the name. That is not important. As Shakespeare once said, what's in a name? So there's nothing in the name. It's all about the game that we're about to play. So I'll ask you to choose a share, Bhanuji. What share would you want me to explain the terms with? Anything you like. Anyone you like in the entire market, not just in the screen.
Sir, Asian Paint.
Asian Paints. Okay, yeah, that's a very fair choice. Okay. First of all, to begin with the share, you can see this is a certain kind of figure coming in front, 33.43. Now you don't know if this is the last traded price or this is the closing price or this is the, and because right now we know it is the closing price because the market is closed right now. But in the morning, in the daytime, there is a lot to be checked before agreeing to anything. So firstly, check the market depth. I think the only reason we have to move to another share is because I think it's not very well traded in the last few days. There's no orders right now for the share, but that could be because of the market closure as well. Oh yes, the market is closed right now, so we're not seeing these because I told you the orders are good to the day. GTD orders are already closed, no orders are pending. But in the day, you see that these are the ask. So what like sell aspirants, what quantity they are offering, at what price they're offering. You see, I have a choice. If I want, I can reduce this price at what price I'm ready to offer, right? Or I can increase the price at what price I'm ready to offer. This is limit. And the second thing here is market price. This order will be executed immediately, almost immediately, seamlessly. And I told you the patient person wins in this market, sir. This is a very emergency kind of an option. So let's try to use the limit price. Okay. This is the limit price. So I don't want to sell at any price, sir. I would want to sell when the price is 3,400 rupees. Here's my limit. Have your aspirations ready, but it will only be active till the end of the day. So always choose your price very wisely. So once you choose the price, you can sell. We need to discuss a lot of buying and a lot of other issues in a little detail. So I just need approximately 10 minutes of a breather. I think will that be okay, the moderator, if I have some?
Yes, sir, sure. We can take a break for 10 minutes.
10 minutes break and we'll join at, let's say 5 minutes to 8. Will that be fine?
Yes, sir. Pretty sure.
Perfect. Thank you so much. I want the audience back, and as many numbers, they all should come back, because now we're practically going to apply what we've been reading from so long. Thank you, Manuji. Thank you, everyone. Let's meet
Okay,
up 10
sir.
minutes.
Okay, sir.
Of the online portal. I would like to start with the portal that we told you that these options that you can see, these are actually that I told you the bids and ask. I told you that bid and ask is not just one. So when I saw the depth, I can see 5 depth. This is only limited to the portal. Please do not consider that it is the entire market, that every portal will behave in this way. So there are 2 options. Either you can see the last 20 orders, bid or ask, or you can see the only 5. And similarly, like 5 orders can be seen, I can also see the opening price. Just a minute. I'm so sorry. Sorry, I've just missed that. Here it is. Under there, I can see what price did this open on. So in the morning today, it opened at 3,385 and ended at 3,337. So it's a fall in the share price. And there were circuits available. These are the circuits that beyond this price, the price cannot go higher. And below this, the price cannot go lower. This is done to make sure that suddenly some panic selling and panic buying does not, trigger the collapse in the market or the share, or maybe the hype. Because if they allow it to hype on Monday, they cannot help the auto correction. What is auto correction? Now that's a very important concept. Look, if anything is overvalued or undervalued, there's a standard value. Like let's say the fair price of something is 10 rupees. And just because of demand, that is selling for 12 rupees, 15 rupees. But in a long run, usually everything comes on to a standard price. For example, you have a very popular biscuit brand called Parle-G. So if that is for 5 rupees, just because today 100 people are buying Parle-G, or someday they're having more demand, they do not increase their MRP, because they know the value of the product is 5 rupees. So if we increase the price, what will happen? As I told you, basic economics, at the same supply, a higher price will lead to a lower demand, and your product will be wiped out of the market. And that is why a market is very prominent, very concrete in terms of auto correcting the prices. So there are circuits involved here. LTT, what is LTT? Which is just above the upper circuit. It is the last transaction time. Certainly, which is surprising to me, that there was no transaction on this share on this date. Today, there was no transaction. You see the date there is 7th July. That means yesterday, the last transaction happened at 3:59 and 45 seconds. See the preciseness of information. And we can see there is no, the average price and volume is not applicable here. And of course, last transacted quantity is also not available. So in the daytime, when you see this market, you'll always see the last these figures, but right now they're not available. Maybe because of the closure of the market, like I told you. The closure actually instigate a lot of things. Now let's understand other tools. The most favorite tool of learned investors is the chart. This one. You must have seen this chart so many times. And when I ask the question in normal seminars and people ask, the first thing that they want to check is the price trend. So you see that the share of Tata Steel that we're looking right now had a very high price in the afternoon yesterday, around 2 o'clock. But it fell deeply down at 3 o'clock. And of course, it raised itself a little at 3:30. So here's the final price that we are at right now, but there's a fall in the price. So if we see this, what we have to do? Analyze. And the best part of using a trading terminal, earlier you would have had to change your filters and get a longer trend. But to do a longer trend here, if you see my mouse right now, I think my mouse will be visible to you. Yes, let me check my screen. I'm not really looking at myself. Okay, here's the mouse. I just roll it a little. I just will roll it a little, and you see the trend has started to change. Just small roll will take the trend starting to change. Why is it this important? Well, understand in this way, like I saw this much and I was scared that is Tata not doing well because it is falling. But a longer trend will show you that, okay, it actually is not doing well. So I'm also surprised, but that's okay. If we see on 940, and then yes, there's a longer trade available. Information for the 6th is also available. Somehow this share is very volatile at this moment. I've not been following up this share, so could be different. What is this mountain? Actually, these are different types of charts you can see. The most common one is the candle, where you see two candles made. And what the figures that I was telling you, what was difficult for me to explain, I'll tell you now. When I started talking about EMA, exponential moving average, actually exponential moving average is if you say one, if you find exponential moving average 1, it will count 20 candles right behind it. These are 20 candles. The average of these 20 candles is EMA. And that is extremely useful in taking decisions on these shares because it applies a weight to the data that is very current, EMA. And the second thing is SMA, which is simple moving average. It is the direction over a period of time. That is it upwards or downwards? What is the situation? Let's get to them and we'll talk about it. Like this data is for 1 month, 1 minute. And if I want to take a 30-minute data, I'll have a certainly different approach. So this is the approach for 30-minute data. I can see longer days. I can see 20th of July, 18th of April, and I can see as back as 13th of April. A 52-week high is available in this way. Apart from candle, we can have steps, of course. Then you can have a lot of types of charts. Baselines are available. Then most common one used is the candles, of course. And yeah, you can have a vertical line if this suits you better. So it has given you a lot of options on a click of a button, which was not available before the trading terminals introduced themselves to us. Any which ways, moving on. If you want to have any of such studies that you want to do, you can see on your screen, these are the studies you can do right from the click of a button. My job is not to teach you every study, but I'm trying to teach as many possible. But there are a lot more things that you can learn. And then you can save the preferences, like what kind of a chart you like to see. You want to save it, you can clear it as well. And if there is any orders, okay, there are no orders on it. So we're not having the orders in front of us, but then we can have the range sector. We want to have 2 chart, 4 chart, 5 chart in front of us. We can compare 2 or 3 shares in front. Everything is available. So we can do this as well. I've just done it for a aesthetic part. Thank you. So moving on, if we go and we want to draw, like we want to put any directions, we create channels, checks. Now, only thing that we will understand here, look, I've made a check here. So this is a very good point I found. Then I made this check here, not only for educational purposes, but this is a closing cross point. So I want to say that this is not a good point to enter or exit. I put a cross point here. I am making a chart, a dynamic chart in front of your eyes. And this is only possible because of trade terminal, the tools provided by the trade terminal. Any which ways. If you need any more information, it is available here. Show the tooltip. If you want to have call out, and you can also view it like this. Now, this view is important for whom? Look, when you initially start analyzing things, charts are not a very relevant start because you think in numbers. Charts are at an expert level. Like if you talk about a company, let's say a factory, If you go and show a chart to your Braceland supervisor, will they understand the chart? No, they won't. They would need numbers. That this is the production, this is the store loss, this is the availability. But when you talk to the higher management, will they want to see numbers? No, because they don't want to see so many numbers. If you want to make a comparison of 4 or 5 dates or 4 or 5 transactions, please use this numbers. If you want to do huge calculations, then use this. If you want to actually analyze properly, if you want to take a judgment based on 10, 20 transactions, that is enough, sir. This is enough. You can download, you can copy, you can do anything. Additional columns, if you want additional columns, put additional columns there. Here you go. I've got some additional columns for you. So you see, if you want to see the change versus average, everything is here, sir. Everything is available, volatility and everything can be commonly counted out here. We're moving on to a different portal. Just a moment. There's some strategy creation. You can create strategies and write it down here. These are very different tools that we're talking. Can you see the different stake tool right now, ma'am?
Yes, sir.
Okay. So this is the stake tool. Here I can create my strategy in what this is. I have to buy a plan for that. I just want to show you that you can positions also you can mention here, and you can check the intervals as well. Whenever you want the notifications, it will give you the notifications. Quantities and everything can be selected here. Anyways, moving on. This will reset the chart to the absolute value. And if I want to pop out the chart and watch it on the full screen, yes, if I want to make analysis, I'll need the chart to be looking like this. I hope most of you will be getting why the chart is important and how these are used. The lack of feedback, my assumption is the only thing that I hold. So I will be moving on from this chart and will be looking at some more averages and ratios, because that is what will make the decision for you, or maybe you will make the decision based on those. So here we come back. Remember these points. We had market depth, then we pulled out the chart. We can delete this. This will not delete the share from the market, but this will delete from your preferences. And you would not be shown this share very often. Now, when you go to more, what we are talking about is derivatives. And you'll say, sir, we are showing us the charts. Why are you showing us the chart when we are talking about derivatives? Sir, derivatives derive their values from the underlying assets. So you cannot study a derivative. You can study the chart, you can study the share, and that the price of the share will derive the value of the derivative. But if you still like to watch the options, here are the options chain for you. Can you see the option chain, ma'am? Can you give me a thumbs up? That's enough. Perfect. This is the chain of options. I have options for 27th of July. We have different strike prices here, 92, 93, 95, 101. And these prices go up to 131. And let's see some more things. Here is the option to buy and sell your options. And watch list, wish list. These are made as simple as your Myntra accounts. You can put it in the watch list. You keep on watching this option, where it goes. If you want to practice, just put this option on and practice as much as you want to. But at this strike price, if you want to bet upward, then you can buy the call option. And if you want to bet downwards, buy the call option, buy the put option, or vice versa. But if you want to know that where will you get the premium, you have to pay a premium and save yourself from any losses. And this is why I say, in the era of options, making losses is more difficult than making a profit in this market. Because you know that the premium which is gone is gone. If you're making a loss, that means you're not even making profit once. So if you make once in a blue moon profit, that is enough to keep you in the green. Because it's an option. You do not have to be responsible for the downward side or the upward side if you have an option in your hand. Only the premium is the one which is payable. You can see the full option chain, but for that we'll have to go to another portal. So I'm not taking you that far away. You can pin this share at first or the second number, whatever you want to see. Alerts can be created. Now let us see the fundamentals. What an important what important data which we used to find from the annual statements of the company. 31st March or all the quarters, SEBI created quarterly returns. Why? To give you this data on a quarterly basis, sir. This is available on a daily, real-time basis. You see 1 month return, you can see here 0.9% profit. 1 year's return is 24% profit. What is beta? The beta is the weight that has been put. 1.42 times. And the market capitalization is 1,37,676 crores. It is a blue chip stock that we're talking about. The highest price in the last 52 weeks was 124 rupees. The price to earning ratio is 15.72 times. That means whatever earning is, you multiply it by 15.72, you get the price to earning, that is the market capitalization of 137,676. Then PB ratio, then dividend yield, 52 weeks low. You see the volatility. This is going to be considered a volatile share. There is some reason of the volatility. Now let's come to the sector price to earning ratio. This is surprising. Usually when we see popular stocks, large cap stocks, we see they have a better price to earning ratio than the sector. Because obviously people have other reasons to buy this as well. But here this is surprising. For me it is. But you see the two things match. I show you the chart. I showed you the chart. There was so much volatility in it. You see its price to earning ratio is almost 3/4 of the market of the industry. What is the sector? Iron and steel mentioned in front of you. So normally iron and steel industry has 20.67 of a price to earning. Only Tata Steel Capital has 15.72. Then these are available. Sectors dividend yield. You can compare this with the sector here. All the ratios are comparable. See the entire, just a second, the videos. These videos are another option. Look, see the House of Tata managed by Windmill Capital. Entire large cap, mid cap, small cap, everything is available here. No need to go to even a single other website. What more do we want to take an informed decision is beyond the understanding of learned people. You can see the detailed info. You'll be surprised this was not the detailed info. This is the detailed info. The share has been falling rapidly. See, it's in red. The returns are minus 0.93%, 116, or 111 is the cost of the share. 1 day today it fell down. In the last 1 week, it has fallen. In the last 1 month, it's been falling. A year, it's in profit. 5 years, if we see, it's in profit. Maximum year time, if we see, it has come up. So someday in 2002, it was registered for 8 rupees 75 paisa, and today we are at 111. So what do we learn here? Even a blue chip stock, I think this is something we should all appreciate. Even if you talk about a blue chip stock, short term is a very volatile thing to earn. So month, week, day, everything is falling. But do you see the chart here? If I would have bought a call option here at this point, 111 rupees and 65 paisa, and sold it at here, 113.20, this 2 rupees would have been the profit I would have booked. Almost 2% earnings. And similarly, if I would have bought a put option here at 114 and sold that option here at 111, I would have booked 3 rupees of a profit. This is the complication of derivatives. This is the complications of intraday. Be very careful while choosing to go into this entire, what do I say? This is the entire derivative market is volatile. Very important, very attractive, but please have the right knowledge before you even think about going into it. Now comes the important terms. Now you'll want the terms to be discussed and shared. Look, we've discussed the last traded price. We've discussed the average price, everything. What is EMA, exponential moving average? The exponential moving average is actually the average of the last 20 candles. What is the meaning of candles here? So if we put a minute here, if we say 1 minute, it will calculate the average of last 20 minutes. 3 minutes multiplied by 20. See how, do you see this chart? This one, what is this saying? That at last 1 minute, if we calculate, 12 people are bullish. That means 12 people think it is going up, 8 are neutral and 7 are bearish. But just a minute. Are we able to see the technicals, ma'am, right now? Okay. The SMA is the simple moving average, EMA is the exponential moving average because it has the weights. Because every company does not have the same candles. Some companies are highly traded, so the last 20 would have a lower average. There will be lower weight is required, and every transaction is almost calculated on the same day. But like I took the property example, if the last property was sold 1 year ago and the circle rates have increased after that, will the last traded price be very important? No, it will be important, but a certain weight will be added to it. Exactly how it happens. I'll take this the last because this is the most important part of the entire discussion. Let's go to the awesome oscillation. Awesome oscillation, it is a market momentum indicator which compares recent market movements to historic market movements. So whatever is happening today, it is comparing to if this is repeating history or this is going against the history. It uses a zero line in the center. So there's a zero line and either side is the price movement, which is plotted according to the comparison of two different moving averages. So one is the current market indicator, momentum indicator, and the other one is the long-term indicator. Like I've already told you, my nears and dears, that if it is below zero, that means the momentum is way low than it has been in the all time. Usually it is the what momentum this share carries. Right now, the momentum is very low. It is minus 0.88. And please understand the entire data that you are seeing is for educational purpose only. If somebody gets offended, if somebody thinks I'm criticizing any share or appreciating anyone, no, I'm not. I'm just trying to educate and show you how the analysis is done. And two people have different analysis. That's why analysts are highly paid. Chartered accountants really need to hear something about being paid highly. So that's why they'll feel nice about it. Any which ways, the definition. Moving average convergence divergence or MACD is one of the most popular tools or momentum indicators used in technical analysis. So this is actually and again an indicator which is used for technical analysis. Now, what is the most important part about this? Again, because it is low, that means the momentum is going against it. Now, if you ask me specifically what does minus 0.18 means, sir, it means nothing. It means it means nothing because many people don't even know what MACD is and they're trading in the market. So if you know it, then you learn it and then it becomes your indicator. Sometimes it's a driving indicator. For some people, it's important. Some people don't even consider this to be even of relevance. And then we come to our another indicator, which is competition commission of, sorry, just a moment. This is not competition commission. Just a second. This is an indicator and I think this has been miswritten on the presentation. Just a second. I have encountered an error at this point. Okay, commodity channel index. CCI is commodity channel index. Basically, the current price level relative to an average price level over a given period of time is commodity channel index. Now, if it is relatively high, then the prices are above their average price. Now you'll ask me that you already know that the prices are higher than the average price. Sir, I'm not asking you to tell me what average is happening. Like I've used CCI 20. That means if I'm choosing 1 hour above, if I'm choosing a minute, it will take a minute's average. So in last minute, the price is higher. See how the slide changes. In the hour, it goes below. In 30 minutes, it goes a little lower than the before. 15 minutes, again lower. And suddenly when we see the days, in last 20 days, the difference is not that relevant. So CCI indicator is comparison of the price of the averages. Now, after having done all that, We are talking about the relative strength index, and this was developed by J. Wells Builder. It is a momentum oscillator that measures the speed or change of price movements. Sir, this is the core of your discussion, because if this RSI is high or low, your risk-taking capacity. That means this will tell you, RSI will tell you that changes of price, how fast do the price change? The volatility is being measured, and this is being measured at a very deep level. So it is indicating the price, but again, this is a momentum indicator. That means this is the best comparative ratio. Now, don't ask me if higher is better or lower is better. Then what is the point of you analyzing? You would not be the audience, you will be the clients of such a person who will explain you what RSI is to be considered. I am only here to tell you that this is a ratio. You can go study the ratio and check for yourself. You see the moving averages, the oscillators, a lot of averages are here. SMA 50, we just saw SMA and RMA 20. See, if you want more, there are more. RSI 14 is here. Momentum is here. MACD, stock, RSI, fast, Williams percentage range. So many details are there. So many technical averages are there that you need to study them. And if I tell you today's session is just about trading terminals and what details can be said. When I was asked to present on this topic, that present on the derivative analysis to trading terminals, I said, you can explain the entire derivative analysis in this topic, because trading terminals have everything that we can imagine and more than what we can imagine. So that is the level of depth of this topic. You can go ahead and keep discussing more and more, and I will not be bored until the end, because this is actually the future is here. This is what the future which everyone used to talk about, everything in a click of a second. Okay, now there are some strategies. These are bearish strategies and these are bullish strategies. What are these strategies? That you can backtest the strategies, that somebody gave the strategy, what was the result? Is it doing well or not? These are just given strategies. Somebody is giving it. Engulf bull, spinning top. What are all these strategies? Sir, this is actually KD stochastic crossover strategy. These are very well studied, well analyzed, and a lot research strategies that are available for you. So you can actually take this strategy, or you can learn from this strategy, make a combination, make your own strategy, but first know what the top leaders have made and accordingly decide your strategy. Now, as chartered accountants, when we were not able to study in our classes, we used to ask for scanners. So here is the scanners. If you want to NSE top losers, or you want NSE top, there are different kind of top losers. You want to trade with shares which have a price higher than 25, price lower than 25, volume gainers with a bearish trend, who have gained volume but have a bearish trend in them. Top 500 losers. So the entire data is available. It's just upon you that what data do you want to utilize and where do you want to go with this data. It is all dependent upon you. Moving on. I wish to now show you a small tool. This is just a practice tool. Whosoever wants to use it can use it. I'll just ask my moderator if there is any question so far, or this is going to, we just good to go ahead.
No, sir, no questions so far.
I think the country has started to understand shares like anything now. Stock market is the key now. Everybody knows what is happening in the stock market. So let's move on. This is a moneycontrol.com was a very popular tool in young days. So this is a simulation. Like today, you play video games, you have driving simulations, you have a lot of cooking simulations is available, running business simulation is available. So Money Bhai is an investing simulation game. You have 1 crore in cash in your portfolio account and as 1 crore intraday trading limit. You can start trading right away. With this virtual money, you can invest across asset classes like shares, mutual funds, and fixed deposits. So options and futures are not there. We can always understand options and futures better with the share prices, because eventually the value will be derived from option then. So the value will be derived from the underlying shares. So I'll show you the portfolio. We made a small portfolio today for your assistance. I'll just take the login details of it.
Sir, sorry for the interruption. Sir, there are few questions of the participants.
Okay, yeah.
Sir, one person, Sumit Jain. Sir, he's asking chart reflects the movement before news is come out in the market.
That's a wonderful question. Sumit, what's the full name, ma'am?
Sumit Jain from Jaipur.
First of all, a very good evening, Mr. Jain. I am thankful for your question. Actually, chart does not. Okay, news hits the market. There are two situations here, ma'am. First is the situation where the movement is because of the news. So obviously, in that case, the chart will reflect it after the news hits. Of course, when the news hits, then impact comes, and then the chart reflects the movement. But sometimes when the analytics of mutual funds, big houses, corporate houses investing, of very huge investors, let's say even an individual can be a huge investor. He starts selling suddenly and the price starts going down. The chart will reflect early, but that analytics will come out in a week or two. So this is not related. The news and the charts are not related directly. Indirectly, yes, if the bad news will be there, the chart will go down. And if the chart will go down, there'll be a bad news. So it's a vicious cycle. That's all I can say. Yes, ma'am.
Yes, sir.
Please do confirm, Mr. Jain, if you're there.
Sir, there are few more questions from the previous one. Sunil Chordia from Navi Mumbai.
Yes, Mr. Chordia, yeah.
He is asking, can you explain impact cost once again?
Perfect. That is an important concept and that requires a detailed explanation. Actually, impact cost is basically the cost that will have to be incurred to generate a value. Mainly, it talks about two parts. Sir, the time that we have to spend or the effort or the cost that has to be incurred to sell a particular derivative or a particular share is also a cost. The higher the time that you will have to take, the more difficult it is to sell a share, the higher will be the impact cost. It is as simple. In simple words, this is my hand. To move this hand, this is the impact I want. This is the cost. This is the force that I have to put in. So the cost that is required to sell this share is the impact cost. This is majorly measured with different underlying assumptions and sources. If you give me an email about this, I'll share the calculations with you. And if you are interested about this, you can obviously go back and do the test checking, and you can also do the you can derive the equations. That's a very good practice. Deriving the equations, I don't think there's any practice better than deriving the equation. So yeah, you can take the equation for me. Yeah.
Sir, there was one more question from Mr. Raja from Hyderabad.
Yes.
Sir, he's asking, please advise the relationship between implied volatility and Vega, and whether it is a significant relationship, and if so, how to interpret.
Well, this is a very complicated issue. Can you please repeat this? I want to make a note of it. Just a moment. The relationship was wanted between implied volatility and Vega.
Yes.
It's a two-part question, right?
Yes. And whether it is a significant relationship, and if so, how to interpret.
Well, first of all, I already have said, I think a few times that I do not talk about interpretation. I talk about how these things are derived. Interpretation has to be individual. That's how I interpret it. But then, yeah, I can tell you how to actually go about interpreting and get your own interpretation. Look, both implied volatility, and these are important when analyzing an option. Option position is analyzing, then these both are important. But there is a lot of difference. Because they have information, both of them have good information. And I mean, these are products of an options pricing model. There's a relationship, but it's going to be hard for me to explain right now because I have, this is a nice question, but I think I would like to answer it on in a detail in some other manner, because This will be really difficult to answer at this point, right? I mean, yes, they are both same. They have certain differences, operational differences. I mean, I'm trying to answer the question. I'm not able to get, there is a difference. There is a difference, but very small one. There's a relationship that they both are used for the same purpose. Yes, please.
Sir, he's asking one more question. Why do all equities are listed on stock exchange do not have F?
Didn't get it, Bob. Didn't get the question.
Sir, I think he has not written complete question.
Could be the case.
Yeah. And Sir Harsh Khaira from Toronto is asking what key indicators within trading terminals do you use to analyze data real time for trading?
I think that's the entire session has been all about key indicators that we use real time. I mean, this question must have been asked almost an hour ago, I think.
Maybe, sir, maybe. It's
This is
appearing
what-
right now on my screen.
I understand that's the operational issue, but then,
Yes.
what's the name, ma'am?
Harsh Khaira from Toronto.
Mr. Harsh, I have answered your question in a lot of indicators: EMA, SMA, RSI, awesome oscillation, MACD, CCI, and then the current price, the opening price, the last traded price, the average traded price. They were all indicators, and these are important indicators that I take my decisions on. That's all I can say. But if you still want to ask something specifically, I can still answer the questions. Everybody who's listening to the answers can, of course, come back to the questions and they can rewrite their questions right now as well. Yes, ma'am. Next question, please.
Yes. Sir, Raja from Hyderabad only is asking CPI is equal to competition commission or is it one of technical indicators?
I'm sorry, I corrected myself. It was just a mistype from one of my assistants in the presentation. So I corrected myself right then and there. We
Okay.
corrected it. That was a small fumble that I happened. I'm sorry, the presentations are sometimes not proofread. The sessions are so promptly happening. So that was a very honest mistake. I accepted and I'm extremely sorry for that. I just said it's Competition Commission of India. And the moment I said India, I realized that this is a mistake and I gave you the right definition, ma'am. But thank you, Mr. Raja. I appreciate the attentiveness. I hope if you're still online, you got the right answer after that. Yes, ma'am.
Yes. Yes, sir. He's also asking market closed at 3:30 p.m. How did the LTT shows 3:59 p.m.?
The settlement happens after the closure of the market as well. The transactions do not settle as soon as the market closes sometimes. So they settle after that. You have the orders cannot be placed after 3:30, but if two pieces have matched, one seller and one buyer have matched, the market will close the order eventually. It will not happen at 9 o'clock in the night, but yes, of course, 5 or 10 minutes, 15 minutes can take to close the order. I mean, that was Zerodha's portal. If you think there's a technical error, we can claim a code on that. Have a screenshot of it and we can fight together. Yeah.
Sir, Sumit Jain from Jaipur is asking why option price do not go up when underlying up on subsequent day.
No, they do. They actually do. I'll tell you, I'll show you just a minute, ma'am. Just a second. Can you see the screen of mine right now?
Yes, sir.
If I have logged out of this or not.
Yes, sir, it's visible.
No, it is visible, but I think I have logged out and I would need that phone right now. Just a minute. Just a second, I've messed it up. I think I've closed this the platform. Just a, okay, it's still there. Good. Look, I'll show you. So he said there's an option chain. So if we go for a subsequent date, the option price, he wants that price to go up, right? Right. So if we go for a subsequent date, everything will change, including the option price. Clear? Ma'am, can you see that if I change the date here, then the prices are changing. Everything is changing the moment I.
Yes, sir. We can
The
see
only
that.
problem right now is the market is closed, so Dip, dip, dip. That's not happening, which happens all the time on this. Yeah. Yes, ma'am. Going ahead.
Yes, sir. Just a minute, sir.
Take your time. Moderation is one of the hardest jobs. I have always had tough
Yes.
time doing that.
Actually, sir, earlier no questions were visible. Right now, the screen is visible.
That happens, ma'am. I have been a moderator as a lot of times.
Yes, yes, sir. Um, Sir, this Raja from Hyderabad is saying the example of stating that call could be purchased when price was 111 and sold at 113 to make profit is ridiculous. He has not explained the Greeks and trying to say options give profit, whereas SEBI in its recent study says that options are resulting in huge losses to individual investors.
Right.
I'm
That's okay. That statement is just read as it is. I appreciate your opinion about the market, but I can just say that that was the opinion on the situation that was hypothetically told by me. I did not mean to offend anybody, and I just would appreciate that the attempt should be not to offend anybody else too when we're writing, not just when we're reading. So, with the most respectful tone that I can take for you, Mr. Raja, I can say that yes, options are creating losses, and I did not deny that. In our country, there is no law protecting the investors from that as well. But I don't say that they'll always make a loss. When I had to give a situation, I'll talk accordingly. I mean, I'm sorry, and I wasn't expecting this kind of a statement, but that's okay. Moving on.
Sir, this Naresh Babu from Bangalore, he's thanking you for the interesting session and he's asking what is the time frame or historical data period should consider while analyzing stocks?
A very good question. I'll try to give the best answer possible. If you're really trying to go back into the data, the maximum period available should be at least seen once. But 52 weeks data is considered as a 52-week high we check, 52-week low we go for. If you're just talking about the trend has to be visible in 52 days. It's almost 2 months, just 1 week less than 2 months. But if we talk about how much data we should check, if we are talking about the stability of the of the company, then the long-term data is important. Like when we were seeing the Tata share, if you remember, we saw that maybe it is going up and down in the daily basis. It is going down as well on a monthly and a weekly trend. But if you see the history of the share, it has come from 8.75 rupees to 113. So yeah, that is not a bad position. It depends how long a position we are planning to take. That's what we can say.
Sir, Sumit Jain from Jaipur is asking whether super trend is helpful.
Yes and no, both the cases. If I make a profit out of it, like, look, I'll just answer one question in a hypothetical statement. They're no good or bad trends. There are no good or bad decisions in this world. Just the outcomes are different and the decisions are either less informed or more informed. So if I get a profit out of analyzing super trend, then yes, it is helpful. It is a good trend. The super trend is, of course, is a good analysis. But what judgment I'm making upon that analysis is the key, not the judgment. It's not the statistics itself. Yes.
And he's also asking, can you please repeat GTD and GTC terms again?
Yeah, that was simple. GTD is good till the day. In past, there used to be orders which we can put there and they would be good till cancelled. Like I said, I will buy a certain share. Sorry, just a moment. Please take this. Like I will buy a share for, let's say, 10 rupees. It is at 12 right now. Market price is 12. I will buy it at 12 and I leave it good to cancel. So maybe this share is going to 14, 15, 16, 18, 20. Suddenly it falls down and now the trend is downward. The trend is downward and the order will be executed at 12 and the share will continue going down. This happened a lot. So that is good till cancelled. It will be there. The order will still be in the system till cancelled. If it is a good today, GTD, the moment the day ends, no orders will be there on the screen. Like you saw on the portal, there was 0, 0. Every order was closed. No order was available. Yeah.
Sir, that's all, sir.
That's all for the questions. Thank you so much. I think anybody else who has any more questions? Because now the screen is visible. So let's make the most of it.
Yes.
Okay, I'll start with the small tool that I was trying to show you. And of course, I think I do need to talk a little about, I do need to make shed a little light on the issue that was put out in the comments, that people make a lot of losses in the options. If you remember my presentation, I expressly said that this is an addictive sport. Options, derivatives are weapons of mass destruction. There are issues with this, but they are not bad choices. You can make profits if you have the right analysis. Predictions don't have to be made with like a cricket prediction, that you have no data, you're just making a prediction. You should have the data, good analysis, and then most of your decisions will come out to be on the positive side, right? Give me just 2 seconds. I'll just log into this account in 1 minute. Okay, so this is a dummy portal that we've logged into. It is good for dummy practices. Like when I started, before I started trading, I was studying with some other subject, and somebody just showed me this portal as a game. So I'll tell you what I started this portal for. So there are leagues here. You can name the league and then see. Earlier there used to be more leagues. So if I go to the home page, so there are leaderboards, the overall events, who's making how much profit, who's getting into losses, everything is available on this. So we used to keep on fighting, and there was just a healthy competition between friends at that time. So actually, you do not have any money invested here. It is just 1 crore rupees that this portal gives you. And now you can see cash in hand and allocated for trade. So I was just trying to show people that how a transaction is made. Since the market is closed, even right now we'll try to create a transaction. So if you want to practice, right? I'm talking about people who have not traded ever. So please, no more comments about that. How can an experienced trader help with this? This is not for experienced traders. This is for people who are first time going to try and they want to test their analytics with the help of a simulation. So for example, I think ma'am said ACC or Asian Paints. So she liked the stock of Asian Paints. So we'll start with Asian Paints now. We'll add this stock. So the price of Asian Paints is 33.44 and it is falling down. It's fallen down in the morning. The volume of trading is huge, 37.59 thousand. I want to buy this share, but see how the buying tool works. This is a bad tool. The actual tools are good. This is a bad tool of simulation. Let's say we decide, ma'am, 100 shares is what we want. And what do we want it at current price? No. I would like to show you limit pricing, not current pricing. So the limit price which we talk about, I want to buy this share if it turns at 33.40. That is what my expectation is. Now you see there are two options, GTD and GTC, good today and good to cancel. So good today is the best option, and usually I don't think market gives you the good to cancel option anymore. If it does, I'm sorry. I've never seen and never thought about that option again. So I think about that, how much money do we want to make for this? Now we decide that we want to make approximately 6,000 rupees out of this share, right? So we will try to tell the computer that sell this share at the target price of 34,000. But we want to make 60 rupees per share, but we decide we do not want to lose any more than 25 rupees per share. So we put the second stop loss at 33.25. What is my strategy? I have no strategy. I am just showing this in a seminar. Actually, this is written because it is at least a 10-word strategy. So you can put your strategy, whatever it is there. Okay, you can share it on the forum if you want to have a discussion, live discussions with other people who are trying to learn the market. And once you put done here, okay, the stop loss has to be, sorry, I wanted to put 33, okay, sorry, 33.25, a zero came in from nowhere. There we go. So the orders has been placed and you can see in the pending orders here. So there are the pending orders. We have we've done this earlier because some other friends also were learning in other classes. So that is when these orders were placed. So this is, you can see the orders, and if you want to analyze any of these shares, you can click on them. And they have small tools, little benefits is being given here. And you can have these tools as well to use. But I think the tools which are available on the live trading terminals are far, far better than these, way better. So these are just for your practice, and you can just practice placing orders and getting out. Let's see how much you can make out of this. So that's exactly what you can do. Yes, ma'am. Any more questions that we have until now?
No, sir. Just there is a one comment from Sumit Jain from Jaipur. He is saying derivatives trading is not an investment. It is just mathematics.
Absolutely. It is not investment. Seriously, it is not an investment. Derivative trading is not an investment. Absolutely, sir. We are actually cross hedging in a nominal term. Somebody else is hedging their losses, and we two people are speculating. It is not betting, but it is mathematical calculation that will this happen or will this not happen.
Sir, he is asking on what basis stop loss level should be decided.
The amount of loss that I'm ready to bear. This is called my risk-taking capacity. That's it. Whatever is my risk-taking capacity. Some people don't put stop losses. Some people are ready to let it go as below as it wants to. Some people have a certain degree of risk. Like I told you, I talk in very generic terms. That's why. Like, ma'am wants to earn a profit of 60 rupees on the higher side. If 60 comes, she is satisfied. So that's okay. Rewards are done. And she does not want to lose any more than 25 rupees on this share. So she stops the loss at that. No basis. It is mathematics is at deciding the amount. What loss and what profit we want is all a risk taking and reward hunger capacities. Yes. Because one risk which we are not seeing, I'll just share it. Give me 2 minutes. I just want to share another risk. One risk which we are skipping here. If you say that, okay, let's do it 30. Why did I do 25? What if it goes until 28? We had a 25 capacity, we said 30. And it goes at 28 and it is still falling. At least 5 rupees have been saved per share, no? Because we stopped the loss beforehand. And some people ask that what is the risk in using the target price? Ma'am, simple. If I took a target price of 3,450 and the share came back after going to 3,410 or 3,420, we lost the entire profit that we could have booked. So honestly, like with share traders, sometimes share traders talk in this language that, okay, profit booking kar raha hai. Are you booking profit? What are you doing? Same way, the people who book profits, the people who are ready to play the game like it is, that's the only people who should come into derivatives trading. Derivatives trading is not for investors. Yeah. Although people do have derivative portfolios. Yeah, I'll just take 2 minutes again. Now I have remembered the example, and this is the problem with public speakers. Once they remember an example, they have to take it out. Because otherwise, I'll tell this example to my wife and she's not going to be happy about listening to any work talk. So there is a lot of barrels of oil which are traded very frequently. Many barrels of oil. Because in the commodity market too, there is a certain day this entire transaction will come to an end. Right? And if the person who has the call option does not take the call and he's ended and the ultimate time has come. So you have to take the delivery. Ultimate time of the end of the contract of the future has come, not the option. The futures have come to an end. Mostly oil barrels are traveling in futures. And you have to take a delivery. So that is why the deliveries are never taken. You just keep on doing buying and selling very oftenly. So keep deferring the delivery as much as possible. That is why they are so frequently traded. Yes, ma'am. Anything else that has come on the portal?
No, sir, no more questions.
Anybody who wants to say anything, any more questions, or are we good to close the session on these terms? Any comments, ma'am?
Yes, any questions, participants? Please, you can share in the box.
Or even if you want me and ma'am to go away from your screens, you'll still have to say it. We won't go away so easily.
Sir, I think questions are over.
That's all I believe, yeah. So I'll just conclude my remarks. Thank you so much, CA Bhanudir, for wonderful moderation. It's really a hard job and you've done it exemplarily. And thank you to CA Charanjot Singh Nandaji, the chairman of the board, and Mr. Gavarji, Amishji, obviously the vice chairman, CA Kota Srinivasji, and Om Prakash ji and Ashok ji, and everybody involved in this session, all the people who asked the questions, people who passed any kind of comments. I'm really thankful. At least you were there listening till the end. That's the most important part, and keep learning and keep growing. I hand over the session with these words to CA Bhanugir ji. Thank you.
Thank you so much, sir. What a wonderful and insightful session it was. I express my deepest gratitude towards you for sparing your valuable time and sharing an ocean of knowledge with us. I sincerely thank all other participants for your active participation and making this webinar all the more interesting and fruitful. Thank you so much, everyone.
Thank you very much, everyone. Bye-bye.
Okay, sir.